Well, good afternoon, good morning, depending on which part of the country you're in. Welcome to today's live market update. Mike Smith here, head of client education and trading, and senior analyst to lead you around some interesting things to share today. So what we're going to do is our usual format. We're going to check out some headlines, and then of course we're going to have a deep dive into some charts to see what we can see what's moving, what's grooving, and what may be worth keeping on your radar over the next few hours and potentially days, of course. So thank you very much for popping in. It's always a pleasure and a privilege, whether you're watching this live or whether you are watching it on a sort of recording. It's always good to be here with you. Let's let's first of all, of course, give you this important message just to remind you that this is for educational purposes only. Please make sure that you do your own due diligence on anything you see here. Make sure you follow trading plans, and of course, make sure that you uh, manage risk consistent with your own personal trading objectives and financial situation. Okay, so let's start by looking at the headlines that we're got to deal with today. Of course, U.S. equities paused near record highs. We'll check out charts in a minute. Um, Towards the back end of the week, we're just a bit directionless, really, as the market waits for some more information to digest. U.S. government shutdown continues. No sign of resolution there. The healthcare subsidies of the Affordable Care Act remain a sticking point. Um, we do have some positivity with earnings season, of course, uh, which is holding markets up. To be absolutely honest, there is undoubted strength in. Just quickly, there we go. There's undoubted strength in earnings. I'm just getting the latest scores on the doors for you here. If you give me a second. Um, so there's just over or around about two-thirds of S&P 500 companies reported. A staggeringly good 83% are beating EPS expectations and 79% a revenue surprise to the upside. So that's very, very positive. And as I said, that is what's actually holding markets up. We've got some positivity in futures today. They seem to have moved recently, which is always a good thing, of course. So mildly positive so far today. Asian markets aren't really following suit. We do have the Nikkei closed. ASX, when I last looked, was down about 0.1%. European futures are pointing to a cautious open, but that appears again to be slightly more positive than it was on early Asian trading today. Gold's looking to consolidate after the recent pullback and bounce. Copper's range bound. Oil is also range bound as markets look for some direction. Bitcoin looks generally soft again. We had a failed test of 120,000. Again, we'll check out charts of all of these in a moment. And earnings and trade news will continue to be important throughout the week. The UK and obviously the RBA rate decisions are expected this week. Both are expected to pause at this stage. And in terms of today, the data is a bit bland in the early stage. We do have some Swiss CPI data out later, and we've got some manufacturing PMI data coming out of Europe, the UK, and the US later. So they all potentially have market sentiment influence as we as they'll give a guidance as to where the global economy may sit. So just watch out for those later in the day. Just checking out let's check out some charts, shall we? It's around about that time, so we'll do that, and we'll start by looking at the Dow. Let me just flick screens for you. There we go. Just want to pop. There we go. I don't think we're going to get any charts. Okay. So you should see the Dow come up now, and you can just sort of see that pause I referenced. If we just You can see there we are up today slightly, as I said. And this is record highs, remember, we're playing with for right now. If we can go, but if we put this on the weekly chart, you can see that. So this test today of record highs, but we've had, if you look at there, we've got a 4 week rejection of a move above 47,704 in the futures contract. Retest this morning. So this could go either way. Um, it's very much in the balance as to whether we sort of pull back down towards this 46,800 or we see a move above that and further buying coming in. The It's probably worthwhile having a look at the Nasdaq as well because that obviously has had a bit of a bumpy ride in terms of, or a bit of a bumpier ride in terms of what's been happening with the US-China trade talks. Very little resolution there, and very little difference to, in fact, where we were back in April. So you can see a slightly more active Nasdaq. Of course, we do have some big tech earnings coming out. Just watch for those as they do. Remember, with the futures contracts, we do get this last hour is after US market close. So there is often that's when big tech seems to report. So there's often some major movement there, just in case you've got some NDX 100 positions open. So just be careful of that. But as you can see, within a strong throw again of record highs, which we tested during last week. Again, a similar story. We had 4 weeks testing that. So yeah, this is going to be a theme of today, I suspect, in terms of where we're at. Let's come back to Tesla in a moment, but let's just check out the US dollar, I think. You can see here we are actually sort of pushing higher again. Um, this was on the back of when the Fed did their last rate cut, there was a slight less certainty of a rate cut in December. So this futures contract on the US dollar index is sort of interesting in reflecting that. Pushing back up to this 99.80 key level here, you can see that's the 200 MA as well. So the markets will be watching that. It was last hit in July. So somewhat surprisingly, we are at almost 4 month highs on the US dollar. And of course, that has an impact on gold. And one of the things that we saw over the last couple of weeks or so was this sell off from record highs in gold. Just to put this into context, of course, gold had a stellar run to the upside. If we just pop it on the weekly chart, you can see that we've had this major run up throughout 2025. If we just context is always important. So if we just look at sort of the end of or the beginning of this year, we actually moved up 63%, which is staggering. So to pull back around about 14% to where we're trading right now is just a normal market retracement. It feels more than that, of course, because of the speed potentially that it happened, but seem to have found a support around about 39.20. We got a bounce off that back over that critical psychological 4,000, but really failed to hold that with any conviction. And so that becomes now, if I just move that right on that 4,000 level. So you can see the importance of this. We had a brief pause before we shot up to record highs. We're pausing there again. We gapped slightly downwards in Asian trading this morning, but have moved up again. There's that gap down and immediate sell with an immediate bounce. So in technical terms, this looks very messy now and maybe worth just holding back on if you're interested in a long position until it potentially moves back towards this 4,037 with, as I said before, 3920 being now an established support. So again, a situation where the markets look as though they're in waiting for the next bit of information. Copper's very similar. We tested a resistance last week at 522. Pulled back to this sort of 510 level where we're just sitting slightly lower in Asian trading today. And oil, again, a very similar story. We saw that push up towards this key level around about 62.35. But as is often the case, if we don't get a break of a key level, it's called resistance for a reason. So we often get a downside move unless we actually get a breakout. We didn't get that. So this is where a lot of traders get caught in that they try to preempt what may be happening, ignoring key structural levels in on charts. And so um, if you needed a lesson there in terms of waiting until there is some technical confirmation of a potential sentiment change, then it's always worthwhile just hanging loose until we have seen that happen. Bitcoin is very noisy as well. We've marked, we've talked about 12,000 being sorry, 112,000 being a key sticky level on this. That's somewhere here. 16. Sorry, just want to pop that into the right place. There we go. And you can see it's returning to this point several times over the last few months, with a key level around about 106,500 to the downside. It keeps bouncing off, or has bounced off early October, and again bouncing off now. We saw a little bit of a recovery at the back end of last week. But this again looks range bound. You can see that consistent message across markets for right now. So, um, yeah, so that's where we're at. In terms of the FX, again, you can see some consolidation in that with that USD strength. It did bring us up into this range at the back end of the month. But you can see on this hourly chart that really we've got two clear lines in the sand here to keep an eye on. 153.85, 144.40. We're mid-range of that now. You can see that with the Bollinger Bands, we've got that decrease in volatility with the bands getting tighter. So we've got a really nice potential sort of straddle trade here. So it's worthwhile watching these two levels for a breach either side. A breach to the downside of 153.84 could see us, you can see that's a straight up move. We could see us drift back down towards 183 and change. A move over 184 is significant. It would represent a high not seen since February. You can see why it's stuck at this level because that was a consolidation, price consolidation area here, support here, resistance here. So a move to the upside could be interesting, perhaps taking us up to 155 if there's some buy-in pressure there. But that's actually quite a nice chart to keep an eye on. Unlikely perhaps today to rock and roll, but we can certainly have a look at that over the coming days. We're going to see this time and time again. So you can see there's the GB pound yen in a trading range on the daily chart between around about just under 204 and 201.40 to the downside, or about mid-range in that. But it all looks very noisy again in here. We're going to have to see a move either over this pink line at around about 203.25 or to the downside, 202 really. So completely uncompelling. If we look at the US Swissy, this is a chart that caught my eye this morning. If we look at it on the daily chart, it puts a slightly different context to it and is a good reason to go and have a look at the longer time frame if you're trading the short. So you would look at the hourly chart there and say, woohoo, it's about to take off. But then you can see where that line is that we put on the daily chart, which was previous resistance back here on the 8th of October. So a move through 80.60 would be worth potentially having a look at if it gets there. But again, there's potentially quite a lot of noise just above that. So again, not a chart that's screaming enter me, enter me. Let's look at the Aussie Swissy to see if that's any clearer. And you can see on the hourly chart again, we've got a key level being tested here at around about 52.70. Now again, look at the long-term time frame, and you can see here again the upside is capped. If we look at the next potential pause point, which is around about this 52.88 level, so it's only a case of 13 or 14 pips, really not attractive at all. Let's have a look at the Aussie Kiwi, which does actually show some interesting price action. Let's just have a quick scan at the daily chart. Uh, and you can see on the daily chart there, with that breach of 114 looks significant. So on the daily chart, we've got a movement above this. Uh, on the 4 hourly chart, likewise, we'd probably have a line around this point here to say, yeah, on the 4 hourly chart, we've had a breakout, we've had a retest, and now we're moving higher again. And then we can translate that to the hourly chart, and you can see there once again we've got a line in the sun that's been breached. This is a very technically strong chart, not just because we're going to breach on the shorter time frame, but particularly because we've got a multi-time frame breach. Even on the 15-minute chart, you can see ever increasing buying pressure coming in the short term. So I'm going to make the Aussie Kiwi my chart of the day because it is a multi-time frame test to the upside, and it looks as though we've got a breach with a reasonable amount of volume behind it on shorter time frames. You can see already we've surpassed the candle, uh, the volume from the last candle. So this supports buying pressure. It's at the top end of the candle. So that's looking interesting. So Aussie Kiwi chart of the day. Um, very quickly into the world of the ASX. As I said, looking a little flat today. A few noteworthy stocks. Lithium stocks were doing well last week. You can see they're not very convincing today. Megaport is one, however, that has caught my eye. We talked about this last week with the potential test of this level around about 1682. It has breached that in today's trading from a context point of view. This is looking very strong. This is the high on this all the way back to 2021. So the bias certainly in this tech stock, I think involved in network services. So that was one that certainly caught my eye. As I said, lithium stocks looking as though they're pausing today. So PLS, you can see that pullback on Friday, not dropping off anymore, but it looks as though the market needs some more information to get enthused. Let's also have a look at Zip. We talked last week about the potential for this to bounce. Doesn't look as though it's happening right now, although we may be consolidating around this $4 level. So too early to technically get excited about that at all. BBS were another one that we were sort of suggesting might be worth an eye. You can see it's trading in a short-term range. Now, a breach of 305 would have upside potential, would suggest after this drop, we've found a consolidated range. There may be some institutional accumulation going on with that support at 287. So again, be patient. Keep this on your radar over the next few days. There's MP1, yeah, as I said. So we're going to make Megaport the chart of the day today, but also perhaps just keep an eye on 360 ASX. I think that could be good. And iron ore stocks are still flying. Champion Iron here looks good. A follow through on last week's positivity in this space. Uh, this is attractive, but I think now most of this upside move is done. I think it might get caught in noise here. So that's the only reason I would be cautious. But it does look as though the buyers are potentially in the iron ore space. HCW in the real estate sector, good earnings. Likewise with Mayer Pharmaceuticals. Um, Gold stocks are bouncing a little bit. Interesting West African Resources, not a company I know much about, but maybe worth a look as well. But Megaport are my ASX chart of the day to keep an eye on. Quickly into the US of A. We've seen a pause in some of the big tech stocks. There's AMD now pausing at around about that 263 after this fairly significant run up we've seen over the last few days. Tesla, we've already seen a chart, but let's have a look at this again in more detail. So you can see we're stuck underneath this 260 level. Nice move in extended hours trading. That is actually Friday's candle, I think. Yes, it is. Extended hours trading won't kick off until later. So we're going to move at 459. Look at the weekly chart for context. this is the level that I'm looking at as the next port of call. We do get buying pressure back in 489. An interesting podcast. I watched an interesting podcast over the weekend where Elon Musk was being interviewed by a guy called Joe Rogan, a big player in the social media space. Um, some interesting information about where they're going uh, with some of their products outside the standard cars. Um, some of the cryptos are doing well. Not that interested in talking about them in a lot of detail, but we will have a look at Carnival. One that we are watching as a potential short opportunity. Uh, they, if we put on the daily chart, if we do breach if we do breach this sort of 2770 sort of area, then we could see that could precipitate some more selling. At this stage, it is very range bound, so the two levels of interest are 30.58 to the upside, 27.71 to the downside, um, and both of those worth keeping an eye on. I just wanted to check in on airlines as well because we have been watching them. No action there. So it's a day where there's really very little to jump up and down about. So I think I would probably plant my flag in AMD as my US chart of the day. 263.78 is a level to watch. So there you go. I hope that's been interesting, useful, giving you some things to think about. Thank you very much to you all for popping in. Thanks to Wayne, Tiger, and David, and great to see you. Uh, I will look forward to seeing you again very soon. Don't forget to, if you wouldn't mind, just click a little like on the button on the way out, and we will see you very soon. So you guys take care of yourselves. Catch you later. Bye bye for now.